The stock that we're covering today is Plastiblends India Limited. So as you said, yes, that stock has been doing. I'll just give you a background of what the stock does. It's the largest manufacturer as well as exporter of master batches. What are master batches? In fact, they're compounds that add color to plastic. So, that's basically what the company does. The market share that it enjoys is around 15 to around 20% of the organized market, and the organized market is 50% of the total market. So out of the total market, it occupies roughly around 10% roughly out of the total market for master batches. Moving forward to the stock movement then, the last week it had a fairly good week. So it was higher by close to around 10%. If you take a look at it, this year it's higher by close to around 59%. But the real move started in this fiscal, and in fact it's higher by close to around 80%. Promoters have been buying from the open market in the past couple of years. That's always a good thing when promoters show faith in the company. And additionally, there has been no fresh issue from the time the company has listed in the first half of the 1990s. Institutional holding, though, it's absolutely nothing. It's only around 2% in the company. So that as well is maybe the institutions have not yet identified it, or maybe the valuations are something that's playing on its mind. But run you through the financials then for this year itself. The first half of this year, it's been fairly good, though the last quarter wasn't that great. The first quarter of this year was superb. The second quarter, they booked some inventory loss, so it wasn't looking that great. Let's run you through then the top line. There was not a big growth over there, but margin expansion is what we saw. It came in at around 11.5%, in excess of that, and that was a good 100 basis points expansion if you take a look at it on a year-on-year basis. Profitability as well was higher by close to around 30%. So on the whole, the first half of the year has looked fairly good. Let's compare the first half of the year with the entire of last year then. So those numbers should be up for you on the screen. The EPS is roughly around 15 rupees. So by the end of the year, if they can replicate the first half, that's if they can replicate the first half of the year, then in fact they can do around 30 rupees. Profitability as well, fairly good. I think we can pull up a couple of graphs then and tell you how exactly things have looked. So that's the revenues. The revenues have started moving up from around 200-300 crores. Now it's nearly around 500 crores roughly. And if you take a look at it, the margins as well. Last year it improved to around 10%, and as I told you earlier, it's improved to around 11.5%. So margin expansion as well has been looking quite good. The ROC as well as ROEs, that's looking quite good. And the debt equity ratio has fallen from around 0.5 roughly to around 0.2. So all those ratios are looking good in the last few years. But moving on then, if you take a look at it, the capacity that it currently has is around 85,000 tons roughly. They're looking to add another 30 tons. So in total, they'll be around 115,000 tons in total. And they're functioning currently at capacity utilization of around 80%. I had a word with the management. It was around 70-75%, but they've clarified that now, in fact, it is at around 80%. The largest player is them from the listed space, and the second, the one that comes second is Podar Pigments. That's second, and that's only a fifth of this company's total size. Now, positives going ahead, they're looking to increase their exports. Margins are better there. Currently, exports are only around 30% of the total revenues. Rima and Mangalam as well had done an interview with the management earlier this year. They're looking to hike exports. In addition to that, they're looking at higher value products as well. Currently, it's only around 10 to around 15%. They're looking to push that up as well. And then, in fact, that could help margins as well going ahead. Their working capital days as well has improved from roughly around 130, 125, 130 in FY12, FY11 to around 80 odd days. And that's improving gradually. As I told you earlier, ROC, ROE is good, and even dividend payout ratio is fairly healthy at around the 20%. So things looking good if you just look at these ratios and the likes. What are the challenges though going ahead? Fluctuations in raw material prices, that's something that will hurt them. Titanium dioxide moves around, doesn't help them too much. Competition from the unorganized players, it's a very fragmented market. So that as well doesn't work too well for them because there's no real entry barrier. That's another important point. An economic slowdown in India as well as the rest of the world, it doesn't work for them too well because, in fact, if you just take a look at it, then there won't be much demand. Why you go ahead and color plastics if that's the case. But fairly interesting stock that I've picked up.
Okay, Nigel, and when we'd also spoken to them, they told us that their marquee clients include Reliance, Supreme Industries, as well as Time Technoplast.
That's right. Rima, I just had another point in terms of the institutional holding. It's not great, but there's another big investor that one of the daughters of the big investor is married to the promoter of this. But just to clear the air, that not an investor, but Mr. R.K. the Mani's daughter is married to the promoter of the company.
Okay, but I guess that's in a personal
That's
capacity.
personal, totally personal, has no implications whatsoever.
All right. Thanks, Nigel, for taking us through that.